We're in one of the most extraordinary economic times that any of us have ever lived through. What are the investments we can make or the hedges that we need to protect and grow our wealth for the future?
Rarity, product quality, investors looking for alternative areas to invest in the future.
The one certainty is that there's a lot of uncertainty.
It's been a really exciting time. The middle of our market has gone up 200-300%.
It's definitely a category that's on the move.
I'm Damian Horner, co-founder of Real Vision, and no, this is not my house. Although I work within finance, one of the things that has always fascinated me has been the world of investing beyond the stock market. And I'm not just talking about assets like gold or crypto. I mean truly alternative investments, such as fine wine, art, whisky, classic cars, and so forth. Let's face it, these kinds of investments have always had a glamorous appeal, and in times of increased volatility, like right now, they often come very much to the fore. In this three-part series, we're going to look at how alternative investments have performed during COVID and try to identify some of the bigger opportunities in this space. I started by talking to my co-founder, the acclaimed macro investor Raoul Pal, about the current state of the global markets and other ways that people often look to protect or grow their wealth.
We're in one of the most extraordinary economic times that any of us have ever lived through, where uncertainty is intense and people are searching for answers. We don't really know how it's going to affect us, our portfolios, or our businesses. The equity markets are at all-time high valuation. The bond markets give you low yields, the lowest in all recorded history. And credit markets have the same issue, and they're being supported by central banks. And we can see that people move into not only gold and crypto, but art markets, classic car markets. We've seen the rise of whisky as an investment too. We've seen it in rare brandies, fine wines. We see it across the world as people look for these incredibly rare assets where there is always a demand, where people perceive them to be valued globally. You're looking for things also that are maybe undervalued versus other areas. Every day you see record prices for fine wines or high art, but there are pockets of value. And I think rum is one of those areas. Rum is, I think, as fine as whiskey. I live in the Caribbean. I live in a rum culture, and I've seen rum spread around the world. I've seen it when I used to live in Spain. Rum is a really unique spirit that has those kind of flavor structures that whiskey has, but is not yet known by everybody. And I think its place and its time is coming as this globalized culture looks for new sources of value. And I think rum is one of those. It's also incredibly nice to drink.
Raoul seemed to suggest there that this is probably one of those times when it makes sense to look at alternative investments. I'm particularly intrigued by his interest in rum, as it's not an area I know a lot about. So I'm definitely going to investigate that further. But first, let's look at classic cars, as this is a personal passion of mine. I have to admit to already having been bitten by this bug, especially as it's one of the few investments that you can really enjoy whilst in possession of it. Here's what Andrew Eaton and Mike O'Connor of the Fastest Club have to say about investing in cars.
The classic car market is incredibly buoyant presently. It's been a really exciting time. The last 6, 8, even 10 months really. It was starting to pick up towards the beginning of this year, and then particularly during the COVID period, we've seen interest in historical cars, significant cars, the very top end of the market, people buying and securing cars, not necessarily to use, but also just as an appreciating asset. The middle of our market has gone up 200-300%. Almost coincidental with COVID, in so much as a lot of the cars, as you can see here, are in restoration for a good period of time. And that has somewhat coincided with people buying and securing cars to use next year.
A lot of the cars that have been purchased, it's obviously because of COVID, has forced all the auction houses to go online. And that has been an assisting factor. I think people have obviously stuck in front of a computer and they're looking at stuff and seeing exciting things they want to buy toys they can use in the future when they can get out of lockdown. They want to be free and go and spend the money rather than having it sitting in the bank.
If you've got £50,000, £100,000 in a car, in your garage, or even in a nice storage facility, then there's pleasure to be had just simply going out and looking at it.
What about maintenance and storage? It always seems to be a big issue for car owners. How do you manage that?
Maintaining the cars correctly, or ongoing maintenance, is a key part of the ownership of the car. It's quite a pleasant experience. We can come here to a nice workshop, you see your car being worked on, you can talk to the guys who are doing it, and that's part of the ownership experience. 0.1% probably is the driving of the car. The ownership experience is what people are buying into, and maintenance is a part of that. It's got to be done correctly, because there's very little point in cutting corners.
Classic cars are clearly an exciting part of the alternative investment landscape. But one does have to acknowledge that classic cars do come with all sorts of additional responsibilities in terms of storage and maintenance. Cars may be beautiful to look at, but now let's look at a more conventional art form, art itself. I spoke to Roxanne Zand, ex-chairperson of Sotheby's and founder of Roxanne Zand Fine Art.
You know, the private market relies heavily on foot traffic, on art fairs, and these have, of course, been dramatically cancelled. There is pressure on galleries. The primary market is really suffering. We've seen a 79% drop in the pandemic times for revenue for galleries. The auctions have turned cinematic, highly tech reliant. So in fact, it's literally like watching games show hosts. Buyers, for the first time in history, in a sense, can buy actively from the comfort of their own home. And we see not just volume, but value being sold online. We saw in July an £85 million bacon being sold online. All of this some while back would have been unthinkable.
Clearly, the whole art market seems to be going through a period of enormous transition, perhaps even more than other industries are. Because in large part, the art market has been run the same way for many, many years. This shock to the system is going to take time to work its way through, which makes it a difficult time for art investors.
Frankly, I would say that the most salient point is not to predict anything. I am personally unable to make a clear and satisfactory prediction. And like the stock market, like many investments, the one certainty is that there's a lot of uncertainty at the moment.
It's interesting, isn't it? It seems that COVID has shaken the very structure of the art world, and it is still in a state of flux. So how have other sectors coped, such as the wine market? Fine wine is one of the classic alternative investment assets, but it can be a world shrouded in snobbery. I wanted to cut through all of that and find out where to start with a wine investment portfolio.
If somebody came to me and wanted to invest in wine, I'd create a diverse portfolio. But I think it's really important to have some of the great wines from Bordeaux, from some of the great vintages. I would also invest in Burgundy, but the key about Burgundy is buying from the great domains. Because in Gevrey-Chambertin, there's probably 100 people making wine. Of those, 10 are making unbelievable wines, 40 are making pretty good wines, and the rest may be making fairly average wines. So it's really, really key about the domain. I would also invest in Piemonte. I'd invest in 15 and 16 Piemontes. I'd also invest in Brunello and Super Tuscans like Sassicaia, Onalaya. These are very sought after names and brands that people want to drink, and they're making top quality. And the other thing that is doing incredibly well is champagne, vintage champagne. There's a strong demand for the great brands like Dom Perignon, Cristal. One of the reasons it does so well, they do make quite a lot. It's a brand that people can identify with.
That's quite a seductive list of wines and champagnes. But how do you know that you're following the trends and fully optimising your investment?
So we've set up a platform, a good house called Reserve Watch, which basically monitors what you've got in your portfolio. It shows you your returns on your investment on a 3-month basis. It shows a breakdown of which wine areas you've invested in. Do you need to invest in other areas? And it gives a sort of, good overall view of what's happening as far as your investments.
The fine wine industry is obviously fully embracing technology and very cognizant of the fact that investors want to track the performance of their wine portfolios just like they would with any other asset class. But it's not just wine in the high-end drinks market. Dark spirits have been making quite a name for themselves. Whisky has been a very popular investment for a while now, and that might be leading the way for investing in other areas such as rum, which we mentioned earlier. So let's look at how whiskies have been performing as an investment over recent years.
The whisky market, particularly the secondary market for Scotch whiskies, is very, very buoyant at the moment, driven by three things. One is rarity. The second thing is extreme product quality. And the third thing is investors looking for alternative areas in which to invest and grow their portfolios in the future.
The strong performance of whisky makes it a very intriguing prospect for investment. But which are the brands to look out for?
The market is principally based on single malt Scotch whisky. That's been the real driver. But it is interesting now to see brands like Yamazaki, from Japan, other brands in the US like Pappy Van Winkle, which have begun to come through and are well demanded. But it's still principally a single malt Scotch whisky category. The Macallan really broke the mould in the collectible market for single malt Scotch whisky on the basis of extraordinary rarity, really marvellous product crafting, and above all, the creation of Objet d'Art, where we brought together great ideas with superb whisky. And some examples of that were the world record price set for a bottle of whisky at $460,000 for the Lalique Sierre Perdue decanter, the price of $628,000 for the 6-litre M decanter, and of course it culminated in the sale of the complete series of Macallan 6 Pillars Lalique decanters for just under $1 million. So really the Macallan has set that pace. But brands like Bowmore with Black Bowmore, other brands like Balvenie have similarly come in and bolstered that particular collectible market, which is really growing quite dramatically.
So whisky is really delivering when it comes to investing. Which does bring me back to Raoul's original question about rum. Is rum the dark horse in the dark spirits sector? And is it where the biggest upsides could be made?
The secondary market for rum is really emerging at the moment. It's not in full flight, but it seems to have a promising future, and there's definitely legs in it. I think if you got into rum collecting at this stage, you'd still be able to build a pretty impressive collection without spending, way over your budget. It's definitely a category that's on the move.
There you have it. The first step in our exploration of where to be looking when it comes to alternative investments. We know that alternative investments traditionally perform well in times of volatility. But with some of the traditional markets like art looking uncertain of their direction, while classic cars bring with them additional responsibilities, are the best value propositions within wines and dark spirits. The meteoric rise of whisky as an alternative investment is intriguing. But I do wonder if there is greater potential for profit in rum. Just as silver is a supercharged follower of the trends in gold, will rum follow in the footsteps of whisky? Is that where the less obvious but the more exciting opportunities lie? In the next episode of the series, we're going to look at this in more detail, analysing just why whisky has become such a success as an alternative investment, and then pulling out the parallels that we could apply to investing in rum.